Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. Love to be here.
All right, so we're talking Deckers. I mean, I put this one on our radar. We typically don't talk about this one. Just like yesterday, we don't talk about Dave & Buster's that much. And that report was dismal, besides gross margins expanding a little bit, but that stock's up 11%. Deckers up 100% over the last 12 months. Landon, are these brands becoming popular, and that's the reason we're seeing the stock hit record levels?
Yeah, I tell you what, Deckers is one that we kind of like have a soft spot for at Likefolio. It was the reason that we discovered that we have an edge in the markets because, I mean, we're talking 8-10 years ago, we saw UGG boot sales way off going into the winter quarter, and they got destroyed on earnings, and we said, hey, we might have something here. So now it's kind of cool to see them coming back. And, what's interesting is, they're mostly known for that UGG brand, which is doing fantastic. I mean, that they are doing really well. Revenue's up 15% on a quarter-over-quarter basis. They've got $1 billion quarter. They're the UGG boots are they're the hottest shoes of winter, frankly. I mean, they are making a huge comeback, and I think that's the reason why they're doing so well. If you go back at Deckers' revenue reports, the last 4 on a year-over-year basis, their revenue's up 38%, 45%, 79%, and then on the big winter quarter, 44%. So that's why the stock has doubled in the last year. It makes a lot of sense. When we look at some of the data around it, one of the interesting things is you think of Deckers is the the UGG brand. It's all about Uggs, but they've actually kind of got the 1-2 punch going now with Hoka. So this is a summer shoe instead of a winter shoe. It's more of a summer shoe that's more running. It's extremely comfortable, and you can see that on their web visits on a year-over-year basis, they're plus 43%, which out of all athletic shoes that we track is the highest number. Hoka is absolutely performing extremely well, bringing up the overall web visits brands for Deckers Outdoors. So I really like to see this. That's up 12% for the overall company. Hoka is up 43%. Their mentions are also up 31% for Deckers Outdoors. They're basically doing everything right when it comes to Likefolio data. Diving into some of their reports, their direct-to-consumer is up 23%, and that's big. You get a lot more money off of those. You get a lot more margin. Now it's over half of the company revenue is direct-to-consumer. So everything that we've got on this company is very positive, and I think the key is that they're transitioning from just the UGG boots in the winter and a very seasonal company to they've got the winter shoe, obviously, and now they're coming up with this, spring or summer shoe with Hoka. And I think that's going to kind of balance things out for them seasonality-wise. And it's a great combination for this company. It absolutely makes sense why they're at where they're at now. They've run really far, and you always got to be a little cautious when you get a company that's doubled in a year. But everything that we have says that this move is justified.
Landon, there's certainly the 1-2 punch here that you mentioned. It seems like these two brands are fighting over the leader in terms of, what they're doing with Uggs and Hoka. I have a pair of Hoka shoes, like them, don't love them, but they're pretty solid. They've got their little niche, and with the big fluffy soles. Uggs, no, I don't have any. I bought some, but I don't have any. But is there another brand? I see Teva, I see Sanuk, I see Koolaburra. Anything else in there that our viewers should be checking on besides these two monsters?
The two monsters are what's driving everything, especially on our data end. When it comes to the brand visits, the web visits, the brand mentions, everything that we see as tremendously important are those first two. Yeah. Yes, they've got others, so it's not just they've got more than 2 punches. But I think that's the key, is that they're not just that winter shoe company anymore, which Uggs, they were in favor, they came out of favor, they're on their way back. It kind of reminds me of Crocs a little bit in that regard. But I think the key is to smooth that out. For a company that's you've got to have order fulfillment, customer service, manufacturing, all that all year round. It's more difficult if you just have a lot coming in just the winter. But if you can spread that out, and then all of a sudden you've got a lot of those costs baked in, you can increase the margins by smoothing that out over the summer. So the fact that they've got a comeback on their signature brand, the UGG boots, and this new one, Hoka is really positive, I think, for the brand. And it shows, it shows in those earnings reports, as I talked about. I mean, they are doing really, really well. I see they're pulling back a little bit. If you kind of zoom out on like the 1-year chart, they hit a wall a little bit right under 1,000, and now they're pulling back. But, any kind of significant dip, I think, is a buying opportunity in this company. And if you can get this for 850 or 800 on some kind of a strange sell-off, then yeah, I think it's a good buy from here. Their next earnings, I think, are early May, maybe May 2nd, something like that. I don't think they've confirmed yet. So this is not an earnings play, but just overall, this is a company that's made a comeback. It deserves the stock price that it's at, and I think any kind of dip in sales or dip in price is more of a buying opportunity than anything.
Yeah, and your mentions chart that you've got here up 31% year over year on this one, but it reminds me of other charts that we see when the stock kind of gets elevated at here. Remember, this stock just went into the S&P 500 also. That was a lot of the gains that we saw in mid-March also. But now I'm looking at that chart where, hey, your mentions are still good year over year, but now the stock's just, parabolic over that to all-time highs. Landon, that scares me.
Yeah, I agree. I mean, this is obviously, if this company had just been kind of trending sideways at 700, this would be a much better opportunity. But as they will have some dips as people start to think, is this overbought? But just again, we got to go with the data. There, it's supported. If there was a crack in the data, if it looked like maybe Hoka wasn't going to perform well this summer, or UGG boots was really had a worse winter than was reported, something like that, we'd be talking about hammering this one. But as far as bearish, but we just don't have anything really negative on the company. It's all very positive. They're moving in the right direction, not just sales and brands, but they're going more direct to consumer. It's over half their revenue, higher margins. So they're hitting everything correct. So it is a very expensive stock right now. They've earned it with the earnings increases over the last few quarters. And so for me, it's, look for 5, 10, maybe 15% dips to jump in on. I think that's a lot, but 5 or 10%, if you get one of those, I think you gobble up some shares. And barring a market sell-off, I think this brand continues to deliver, and any dip is a good buying opportunity for a long-term hold.
All right, great data. As always, Landon, I'm going to go back to my desk, Landon, and put on my UGG slippers that I have sitting at my desk because they're very comfortable.
Don't say that live. Don't say that out loud.
Great stuff, Landon. Appreciate it.
Awesome. Thank you.
All right, that's Landon Swan, co-founder of Like Folio. I got a couple pairs. One out.